So, Nintendo is sitting on a war chest. As of March 31st, the company holds over 2.35 trillion yen, that's 15.5 billion US dollars, in highly liquid assets like cash deposits and short term investments, and that's more than 7 times their current liabilities. So, this is a fortress balance sheet by any standard, but no fortress is immune from decay, especially not when it's built entirely on fiat money. Now is the time for Nintendo to switch things up, because what's coming next isn't business as usual. The Nintendo Switch 2 is on the horizon, announced in January and slated for a launch of either May or June. And if history is any guide, the launch of a new console marks a very capital-intensive window, a moment of maximum financial stress and maximum opportunity. Console rollouts, like Nintendo has done in the past, require billions of dollars in upfront spend. R&D, hardware production, logistics, developer support, global marketing, and the financial runway to weather delays in flagship game releases, which Nintendo, in the case of its biggest IPs, is no stranger to. Notoriously, its flagship Zelda title that it was going to release on the Wii U in 2014 was delayed to 2015, and then 2016, and then ultimately 2017. And during that window, Nintendo had to bleed a lot of cash. In fact, prior to the launch of the original Switch, Nintendo was on its last legs with a failing console like the Wii U, nearly turning it into a developer rather than a developer and a hardware manufacturer. The original Switch was a massive success, but its launch was not cheap. The company's capital expenditures in the 2016 to 2017 window nearly doubled, and yet it paid off big time. And now they're heading into that same high-stakes window again. And here's the thing. Nintendo's immense liquidity, despite all of that, their cash and cash equivalents fell by 341 billion yen, $2.26 billion, over the past year. At the same time, their holdings in securities rose by 220 billion yen. Translation is that Nintendo is deploying capital, but not in a way that compounds asymmetric upside. And they're not alone. Most corporates do this, right? They park reserves in government bonds or high-grade debt, which is safe on paper, but vulnerable to one massive force, and that's currency debasement, particularly in Japan. In the last 18 months, the yen has depreciated against the dollar, and Japan's inflation problem might not be as acute as the West, but it's still very real, and it's destroying the purchasing power of corporate treasuries at scale. And that's why Bitcoin matters. Instead of holding 100% fiat-based reserves, Nintendo could allocate just 1% to 3% of their balance sheet to Bitcoin, which is the world's only digitally scarce non-sovereign reserve asset. This isn't about speculation, it's about asymmetric protection. If Nintendo had made a 2% allocation to Bitcoin 3 years ago, that position would be up over 500%. A modest $300 million slice of their treasury would now be worth over $1.8 billion. That's free upside. On a risk budget, most firms would not even notice. And this is already happening. GameStop just set the precedent by adding Bitcoin to their balance sheet not 3 days ago. So the video game industry now has its first mover, despite, of course, GameStop being a video game retailer and Nintendo being a publisher and hardware manufacturer. But the entire sector is watching. So Nintendo has an opportunity to do what it's always done, and that's lead the way. Nintendo is notorious for focusing less on speccing out its machines and more so focusing on playability and their IP. The Wii was not nearly as powerful as the PlayStation 3 and Xbox 360, but it had motion controls. In the same way, the Wii U had a gamepad, whereas it wasn't as powerful as its incumbents. And of course, the Switch allows you to take the console anywhere you want, despite it being far less powerful than the PS5 and Xbox One X. So they could raise capital today with 0% coupon convertible bonds, exactly what MicroStrategy has done and what GameStop is doing now, and add Bitcoin to their balance sheet without drawing down a single yen from their reserves. And that move would give them much more breathing room leading up to the Switch 2 launch and breathing room in between those flagship IP releases like Zelda, Mario Kart, etc. It would also give them a hedge against fiat erosion, which is particularly acute in Japan, and a direct path to boosting long-term equity performance. Because let's be honest, how many strategic capital deployments have a 10-year Sharpe ratio like Bitcoin? How many offer uncapped upside with zero correlation to console sales or market cycles, which is the perfect hedge that a video game manufacturer that also relies on its own intellectual property like Nintendo could use? That's why this isn't just a good idea, it's a strategic necessity. Nintendo is about to enter its most capital-intensive window in nearly a decade, and every dollar they spend from now until the Switch 2 becomes a global success is a dollar they can't afford to waste on assets that bleed purchasing power. Adding Bitcoin today gives them the tailwind to navigate that launch window and, of course, the launch year from a position of strength rather than fragility. which Nintendo has been a victim of in the past. It sends a message to investors, employees, and the market. Nintendo isn't just protecting the past, it's preparing for the future. It's time to play the long game, Nintendo. Add Bitcoin. That's all for today. Thank you so much for watching. If you enjoyed today's video, make sure that you like and repost so that everybody can see this. Of course, follow for more if you enjoy this style of video. I talk Bitcoin and global macro every single week. And of course, check out Theia. It's the world's simplest Bitcoin self-custody solution at theia.us. Or you can scan the QR code right there to take you straight to the website. That's all for today's video. Thank you so much for watching. I'll talk to you soon.